All right, Josh, thank you. 95 million Americans don't have life insurance. For the last 11 years, Life Happens has recognized September as Life Insurance Awareness Month. And here with some more tips and information, please welcome Trey Starke, president of the Starke Agency. We appreciate you joining us.
Well, thank you for having me.
Yeah, first off, for folks out there who are watching right now who maybe don't have life insurance, who should have it?
Well, there are a lot of classes of people that need life insurance. Baby boomers need it for estate planning purposes. Individuals and businesses that have taken on debt, young parents need life insurance, partnerships, and even young children need it to guarantee their insurability.
What age should adults start kind of looking at, maybe I better get this taken care of? It's something that's easy to put off and procrastinate because we're all going to live forever, right?
Well, no, not exactly, yeah. But we're going to live longer,
right.
Which is the good news for life insurance premiums.
Yeah.
But normally it would be, I mean, it can be young. People use life insurance actually to fund college. So, I mean, it could even be a young child that, that's just born. But normally it's, in the 20s when you start taking on debt, normally the children in the first mortgage is what triggers the event.
When you get that first policy, or maybe you haven't had one, or it's expired and you're thinking about getting a new one, how do you determine kind of how much you should get insurance for?
Well, we get that question a lot. The rule of thumb says it should be 7 times your income, but different people have different debt levels, obviously different amount of children, and all of those variables come into play.
Now, when you get the policy, kind of walk us through how simple is it to do? Is it something you can get done in a single day, or does it take a lot of paperwork and stuff like that?
Well, it's not quite that simple. It involves an application process, and unless you're buying small amounts of insurance, say like $10,000, they'll be guaranteed. But if you, $100,000 or up application, then obviously there's a paramed done. They do on the spot, take blood, take your blood pressure, talk to your primary care physicians, and go from there. But probably about a month. Yeah,
this might seem like a pretty simple answer, but what are some of the dangers for folks out there who don't have it right now and are thinking, well, I'll maybe, just put it off 10 years from now and I can do it later on in life?
Well, it's really the burden that you're going to leave your survivors, whether it be your wife or your children. It's an income stream that comes in. Obviously, you can use it for estate tax purposes. It's a very good tax-efficient mechanism. And you can also use it to, accumulate wealth. So it's a product that everybody needs at some very stage in their life.
And you mentioned, too, there is a small medical test if you're getting a bigger policy. Right. That's just, I guess, to ensure that you don't come in with some pre-existing deadly
Right. Well, I
illness.
mean, obviously, it affects the premium, whether you have high blood pressure or high cholesterol, or, whether you smoke. All these things come out in the test.
What type of advice you give for folks who are just kind of now getting into the ball game and start? What's step number 1?
I think step number 1 is to make it part of your financial plan. It is very, very inexpensive, especially at a young age, to buy term insurance. More than likely, you're not going to die in 10 years or 15 years. And you can get these premiums, sometimes $200, $300 a year, and it's a very cost-efficient way to protect your family.
When you think about the monthly payments, it's not going to be that much, but you think about, like you said, leaving all that debt behind your family if something unfortunate were to happen, that's a pretty big deal. So like you said, the younger you are, the more cost-effective it is, but still, we should all probably have it.
Yeah, but another thing, too, is that older individuals, when they originally did, the thought process was you would die at 72. That's the mortality table. Well, they've spread that out to now 85. And so there are a lot of people that have policies that they bought a long time ago that aren't very efficient right now, and people that do have life insurance should also look at their policies also.
Go visit the experts, talk to you guys, and I'm sure you get them in a good plan.
We will.
We appreciate you coming. Thank you
for
the good information.
Thank you, Judd.
It's good to have you in here today. Coming up next,